I want you to picture this. Your salary arrives, and by the time you spend it, it's already worth less. In 2018, 70,000 rials bought $1. Today, that same dollar costs nearly 1.5 million. That isn't inflation. That is a currency collapsing 20 times over. When money falls this fast, prices lose meaning, savings vanish, the future shrinks, rice jumps from 100,000 to 2 million rials. Wages don't move, but life does, fast and brutally. If this were your income, you wouldn't be planning your future. You'd be calculating survival. This is not a story about bad policy. It's about a system breaking its own people. And once that process begins, it follows rules, cold rules, economic rules. What comes next explains why this collapse was inevitable. To understand what's happening, we need to be precise. This is not a sudden crash. It's a long erosion. An economy doesn't collapse overnight. It unravels layer by layer. At the center of this story is a simple contradiction. The state needs money to survive, but the system cannot generate real value. So it borrows from the future. By printing, by distorting prices, by controlling markets, official numbers claim stability, but parallel markets tell the truth. There is an official exchange rate, and then there is the real one. When those two drift apart, trust disappears. Businesses can't plan, workers can't save, investors retreat. The economy stops functioning as a system and starts behaving like a battlefield. Every transaction becomes a gamble, every purchase a loss calculation. This is where economic crisis becomes social crisis. And to see how it began, we have to go back to the roots of this structure. To understand the roots, we have to look at how this system was built, not in years, but in cycles. For decades, the economy relied on one engine: oil, easy revenue, centralized control, political distribution instead of productivity. When money flows from the ground, institutions don't learn efficiency, they learn loyalty. The state spends, subsidizes, protects favored sectors. Growth looks stable, but it isn't resilient, because when external pressure hits, there is no shock absorber. Sanctions didn't create the weakness, they exposed it. Cut off from global finance, the system lost access to dollars. To fill the gap, the central bank printed more money, same goods. That imbalance is where inflation is born. And once inflation becomes structural, it feeds on itself. Prices rise because people expect them to rise. Trust breaks because it already has. This is how slow decay turns into acceleration. And once acceleration begins, it looks for a trigger. That trigger comes next. Then the system hit its first breaking point. Not quietly, not gradually. The currency slipped past a psychological line, and people noticed. Not economists, ordinary families. Prices changed daily, sometimes hourly. A salary earned in the morning lost value by night. That's when behavior shifted. People rushed to convert cash to dollars, to gold, to anything real. Markets reacted instantly. Shelves emptied. Imports stalled. Technology became a luxury. Car parts disappeared, and the black market took over. Not because people wanted crime, but because the official economy stopped working. This was the moment trust collapsed, when citizens stopped believing prices, stopped believing banks, stopped believing the future. If you lived inside the system, you felt it immediately. Panic doesn't announce itself, it spreads. And once panic becomes normal, the crisis is no longer economic. It becomes structural. To understand why this spiral deepened, we have to look at what replaced the formal economy. What replaced the formal economy was not chaos. It was an alternative system, a shadow economy. When official channels fail, parallel ones don't emerge randomly. They emerge efficiently. Subsidies distort prices. Those distortions create arbitrage, cheap fuel inside the country. is worth far more across the border, so it moves quietly, constantly. Smuggling isn't a side effect here, it's a mechanism, and it doesn't stay small. Medicine, food, even baby formula. The shadow economy grows because it answers needs the state cannot. But here's the deeper problem. These networks don't exist outside power. They intersect with it. When insiders profit from dysfunction, dysfunction becomes policy. The black market sets prices, not the government. The real exchange rate lives in back alleys, not official announcements. And once that happens, legitimacy dissolves. The state still rules by force, but no longer by trust. This hidden system keeps people alive, but it also locks the crisis in place. And then a second shock arrives, one that pushes the system even further. The second shock didn't come from the streets, it came from the grid, cut off from global finance. The system searched for a workaround, and it found one. Digital money, cryptocurrency became a lifeline, not for the public, but for survival at the top. Cheap electricity turned into digital capital, energy into code. Mining rigs spread fast, quietly, relentlessly. But power is finite. As servers stayed online, cities went dark, factories stopped, homes lost light, blackouts became routine, not because of war, but because the system was eating itself. Electricity meant for hospitals fed machines solving math problems, and access wasn't equal. Those connected to power structures mined freely. Ordinary citizens absorbed volatility. The workaround created a new imbalance. Infrastructure weakened. Public anger grew. This wasn't innovation. It was desperation. A short-term fix that deepened long-term damage. And when energy fails, nothing else holds. Because once basic services collapse, the crisis stops being abstract. It becomes personal. And that's where the real cost appears. This is where the numbers disappear, and you appear, because when systems fail, they don't fail on spreadsheets. They fail in kitchens. Your income stays the same, but rent doubles, food triples. You start cutting meals, skipping medicine, delaying life. Work no longer guarantees dignity. A full month's salary can't cover a week of expenses. You don't think about saving, you think about tomorrow. Young people graduate into nothing, degrees without jobs, skills without demand, and women are pushed out first, not by law, by collapse. This is how poverty spreads quietly, not through famine, but through erosion. If this were your city, you wouldn't protest ideology, you'd protest survival. This is the moment people stop asking for reform and start demanding change, because when a system offers no future, obedience becomes irrational. If you want to understand why pressure keeps building and why it doesn't stay contained, stay with me, because what happens next doesn't stop at borders. What begins as a domestic collapse never stays domestic. Economic failure travels. When one system breaks, it pulls on others. Trade narrows, energy flows distort, supply chains reroute, oil still moves, but only in one direction. One buyer, one channel. That dependency removes leverage, prices fall below survival levels, revenue shrinks, and when money disappears, priorities harden, infrastructure waits, social spending fades, military budgets don't. Regional tensions rise because instability seeks outlets. Proxies become tools, threats become signals. The goal isn't victory, it's distraction, to shift attention outward when pressure inside becomes unbearable. But neighbors feel it, markets price it, global actors adjust, sanctions tighten, tariffs loom. Every response feeds the next reaction. This is how local collapse turns into geopolitical risk. Not because anyone wants escalation, but because systems under stress default to force. And when force replaces trust, the future narrows fast. To see where this leads, we have to look ahead, not at one outcome, but several. When systems reach this point, the future doesn't arrive as a single outcome. It branches. There are three paths. The first is stabilization, limited relief, partial negotiation. Pressure eases just enough to stop the free fall. The currency slows its collapse. Inflation cools, but doesn't disappear. Life remains hard, but predictable. This path buys time, not transformation. The second path is stagnation. No breakthrough, no collapse. The system survives by lowering expectations. People adapt downward. Informality becomes permanent. The state endures, but legitimacy never returns. This is survival without progress. Then there is the third path, acceleration. Banks fail in sequence. Capital flees faster than controls can stop it. Services break. Security fractures. When enforcement becomes unreliable, power fragments. Not into democracy, into competing centers of force. This is the most dangerous scenario, because collapse doesn't end the system. It dissolves it, and dissolved systems don't negotiate. They explode. Which path emerges depends on one variable. Whether the structure can change before pressure outruns control, that answer comes next. This is the moment to be honest. Systems like this don't fail because of one mistake. They fail because they cannot change. Every lever is locked. Every reform threatens the structure itself. Negotiation buys time. Repression buys silence. Neither creates a future. When money no longer works, when institutions no longer protect, when force replaces consent, collapse isn't dramatic, it's logical. History doesn't ask whether a system deserves to survive, it asks whether it can adapt. And systems that survive on control rarely survive pressure. What you're watching is not an ending, it's a convergence. Economic decay, social exhaustion, political rigidity. When those meet, change arrives, peacefully or violently. That choice is rarely made by leaders, it's made by limits. If you want to understand how modern states break and what replaces them, stay with me, because this story doesn't end here. It repeats in different countries, under different names, and the next case may be closer than you think. If this analysis helped you see the system more clearly, share it and join me in the next video.